Hey guys, welcome to the channel. Today we're going to be talking about, the general market update, how it's been going. Definitely a lot to talk about, but in a brief video. One thing I got to say is this isn't financial advice, strictly educational research and for news purposes. So with that in mind, you should be able to enjoy this video. But before you do so, check out our other social medias. Follow us, give us a like, give us some love. We want some of that love. So what are we talking about? Bitcoin. Bitcoin drop, a lot of political uncertainty. Russia might be going into Ukraine. Stock markets are looking like they're crashing. Everyone's kind of got that funk in them right now. But don't let that take you down too much. Because at the end of the day, it's all noise. And what has been the general consensus of this stuff? It goes up. Number goes up, people are happy. Number goes down, you're a communist. So we don't want to be communists, but sadly every once in a while we're going to have to be. So I'm looking at the chart today, and just on the daily chart, I can see here that it almost looks like we are heading into some form of double bottom territory. And you're thinking, wait, does that, is it a double bottom yet? Well, when you look at it from a larger macro perspective on a professional chart, like I'm about to show you now, as you can see here, we basically hit our tops and now we're reaching our bottoms. And depending on how we react in this range, let's say between here and here, and a little bit further down between here and here, right? This is our channel. So within this channel, this is where we're going to actually know what's going to happen. So we're heading into the double bottom territory. So if we hit here and we're bouncing upwards, that's going to be a massive double bottom, right? And this, no matter what, within this channel, as long as we stay within this range, which I'm about to draw out for you guys like this, as long as we respect this to some degree, we're going to the moon, because that double bottom will form, and that will mean that two large accumulations happen. And within those two large accumulations, people make a lot of money. And when they make a lot of money on these dips like that, it compounds when we go to a new top. And I'm still pretty set on the idea that we're going to have a spring rally. I'm very, very much fixated on that. For some reason, my gut is saying spring rally. Maybe I'm crazy. Maybe I'm not. It's not financial advice. But me personally, I'm banking on this double bottom playing out roughly around the springtime. And when it does, we're going to retest this top. Oh, excuse me. We're going to be retesting this top over here. And when we do, and we break it, if we break that 44, 45K range, 69, 70K is our next stop. We're going to be going back to where we were on the daily perspective over here. And the way I see it is, just looking at it here, it doesn't look bad. There's a large volume spike over here, and you could look at that right here. Look at that. That is a lot of volume. Some of the most volume we've seen in a little bit. It's been a little bit dead for the last little while, but the volume seems to be somewhat getting ready to pick up. And even from the perspective of the money flow index, we're not there yet, but it doesn't look like we're going lower. So money's flowing in, and that's something that you want to see. If you see the money flow index going down, the MACD, everything going down, it's not necessarily something you want to see, but I don't personally see this as the end. I personally see this as the beginning of more money coming in. And you can see the uptick here. Even though the price is going down, there's an uptick. And when there's an uptick, that's a good sign. So that's something that I wanted to say. And we're just going to break it down one more time, even from a daily perspective, just so you can see something else here. Hold on a second. The head and shoulders played out. Bang. That's our head and shoulders. It played out. So because it played out, as it stands, we didn't close lower than this here. This basically last resistance at 29K on the last dip, meaning that we are still respecting the pattern of basically higher highs, higher lows. So because we didn't break that, we didn't go below the 29K mark, we're still in a bull market. It's just a bearish period. This is how a super cycle could look. This is how stocks play. It's almost the exact same thing. So as long as we could respect this on a large macro trend, we're good. If we break below 29K, fine. I'll see you on the floor and we'll accumulate till the next halving cycle. But till then, guys, I'm wrapping up this video. We're gonna keep it brief. Definitely check out all our other social medias, subscribe to our Patreon, give us a love, give us some likes, comment on our YouTube, interact with us a little bit so we could talk to you guys. Take care.